Hey guys, what's up? So today we are studying gross profit, net income and cost of goods sold. These are various topics that I have combined in one video so that we can understand them. We will also be looking at their formulas and how they are calculated. Alright, so before getting started, make sure to subscribe, give this video a thumbs up and let's get started. First thing is gross profit. Gross profit refers to a company's profits earned after subtracting the cost of goods sold. We will also be looking at cost of goods sold in a while, so have patience. Gross profit, or it can even be a loss. So gross loss can also be over there if a company's earning is less than the cost of goods sold, then there will be gross loss. Alright, and if revenue is more than the cost of goods sold, then there will be gross profit. Here is the formula of this. Gross profit is equal to net revenue minus cost of goods sold. Basically, you are subtracting cost of goods sold from revenue. Alright. Now, what is cost of goods sold? When you think about cost of goods sold, I'm pretty sure you are thinking, oh my god, shouldn't we know this already? That if we sold something, what was the cost of that item? And you are correct. However, here's the thing. If you purchase a few things, let's say you have a home business and you bought around 100 inventory. Alright, you bought whatever you sell. Let's say you sell books. You bought 100 books. Is it really necessary that you sell all of those books within one period, within 1 month or a year? No. It's very likely that you might sell maybe 60, maybe 50, maybe even 20, right? And there's another possibility that you might have books remaining from the previous inventory, right? So that's why we have to consider all those things and then we have to calculate cost of goods sold. It would be easier if all purchases in a period were always sold by the end of the same period, as we just discussed. In that case, cost of goods sold would always equal purchases. However, this is not normally the case, and so we have to calculate the cost of goods sold. Here is the formula of cost of goods sold. Beginning inventory. What's beginning inventory? Basically, what is remaining in your inventory or stock from the previous year. Alright, so whatever is remaining over there, that's your beginning inventory. Let's take the book example again. Let's say you already had 20 books from your previous year. They were remaining, you weren't able to sell them. Alright, now purchases during the year. Whatever you purchased during the year for which you are calculating cost of goods sold. So this year, let's say 2020, you bought 100 books. So 20 were from previous year and 120 books. This is your total stock in 2020. You have to sell this stock, or at least you have to try to sell all of these books. But that's a very rare case where you are able to sell out everything, right? And of course, we all love being sold out, but that's not really an everyday thing. That's a rare case. That's a rare opportunity. That's a rare situation. So it's very likely that you would be able to maybe sell 50%, 60%, 70% of your stock. So let's say we have an ending inventory of 35 books. You had 120 books and you are able to sell most of the books, but 35 books are remaining and you have to sell them, and this will go to the next year. This is your ending inventory. You will check, hey, what's remaining in my inventory? Now that inventory is 35. So 120 minus 35, alright, will be your cost of goods sold. That's your formula. That's how you do it. First, you see what are the things that are remaining from previous year. Alright, that's your beginning inventory. Then you see what did I purchase during this year. Alright, that's your purchases during the year. And then you see what's remaining, what I haven't sold yet. Alright, so that's your ending inventory. I hope you are understanding this topic. If you are, make sure to give this video a thumbs up. Next is net profit. Net profit found in the profit and loss account consists of the gross profit plus any revenue other than that from sales, such as rents received or commission earned, less the total cost used up during the period other than those already included in the cost of goods sold. Do you remember what was gross profit? So over here you are going to say gross profit plus any other revenue that you might have. Alright, it's not really important for every business to have some other revenue stream, but if you do have it, then you have to add it, include it, and then you have to subtract it from expenses. But there's one expense that you are not going to subtract in it. Why? Because you are already adding gross profit. Remember, we subtracted cost of goods sold from gross profit already, and you don't want to subtract it twice. That's not right, that's wrong, right? So this expense incurred only once. Hence, what you are going to do is, you are going to take gross profit plus any other revenue that you might have earned from other revenue streams and minus the expenses, all the expenses except for cost of goods sold. And that is your net profit. Here is the formula. Total revenue minus total expenses is equal to net profit. In case if there is no gross profit and you haven't calculated it, then you can go this way as well. Alright, just add all the revenues and then subtract all the expenses from it, and then you will get net profit. Next is net income or net profit after tax, or it is also known as earning after tax. Okay, net profit is also called earning before income tax. Understood? These are some different words, but the concept should be clear. Once your concept is clear and you know what these things are, you will get a pretty good idea even if the names are changed. See, earning before income tax. Do you subtract any tax from net profit? No. So that must be your earning before income tax. Then comes net income or earning after income tax. Of course, you are subtracting. It's saying after income tax. So that's your net income. It is the amount left after subtracting taxes from your earnings. Alright, so that's your net income. And that's it. I really hope you guys enjoyed it. If you did, make sure to give this video a thumbs up. Do subscribe and share, and I will see you guys in my next video. Bye guys.